Hello followers of the 4-year journey, this is Bob Lucas here on May 16, 2023, and I hope you're all doing really well. Another installment of the 4-year journey. The last video covered the confirmation of a new 4-year cycle. That video was following the one from December where I talked about the potential for a 4-year cycle low that, as we know now, has materialized. So in this video, it's going to be more of a pep talk here, just to kind of reassure you about the early phase of a 4-year cycle, which I believe is pretty much the most difficult part of every bull market, mostly because nobody has really accepted, wholeheartedly at least, that we're in a new bull market. It's difficult to believe at this point, especially when you've just come through a very dark and difficult period in the declining phase of the prior 4-year cycle. It takes a lot of conviction and removing that bias, that negative bias that was developed, and also the sound bites, the negative sound bites that are a hangover or a carryover from the bear market, that spill over into that first 6 months and 12 months of a bull market. Those are the fears that we all live with in the early phase. I want to talk a little bit about that. I also want to talk about the idea that volatility is coming, but though that volatility event is for buying, and that is because we are early in the 4-year cycle. And I also want to talk about not fearing a top, again, coming out of a bear market low in the early phase of a bull market. There's this inherent or natural fear that we're going to see another top and that you're going to be caught in yet another declining phase. I think I want to reassure you on that. That's too early for that type of fear. So this is going to be a short video, I believe, because again, here we are in the monthly. We had that video from December where I said good chance we're going to form a low right here. We're in the timing band. It seemed like all the selling and the liquidations and capitulation was over with, and we were at a point where the market was ready to begin a new cycle. And of course we had that, and then the last video, I believe it was in March, a couple of months ago, confirmed that 4-year cycle low with that follow through and carry through here well above that 10-month moving average. That candle right there represented a confirmation of a new 4-year cycle, a cycle that ended right there on month 49, perfectly in the 4-year cycle timing band. The reason why it's the most difficult portion of a bull market is because after only 3 or 4 candles, it's difficult to yet buy in fully that we're in a new bull phase. And that's mostly related to the bear market component of a 4-year cycle. This repetitive declining part of the cycle here inflicts on almost everybody, financial and significant damage in general. And you had possibly some significant gains that were built up that you didn't realize, and held all the way through capitulations, through losses, through hacks, and through some exchanges going under, for example. So there's significant pain associated with that, I think, for everybody in general. I don't think anybody entirely escapes a declining phase of a cycle. And that built up sentiment here, that negative sentiment, adds to your bias. And it's not going to get fully erased within just a 3 or 4 month rising portion. If anything, you're still focused on the negative portion of that cycle, and it just takes time for that sentiment to begin to reverse. So the sentiment is certainly a lagging indicator, and that's also the reason why it takes a lot of upside and a significant rally in any market for participants to come back in. And that's where really FOMO comes about. People FOMO in because they didn't get in when they should have got in. They didn't get in early because they were afraid for these reasons. And it's not until they see significant confirmation in price, and they get that confirmation from their peers and their community members and social media, that it's okay to get back in, and that sentiment begins to then swing rapidly back towards the bullish side. So we're at that difficult point right here where people are like, well, I'm in, but I'm afraid, or I didn't get in, I'm afraid it's going to come back one more time. And it is difficult for that reason. So the conviction in the early phase of the cycle is just not there. But as I've tried to point out in prior cycles as well, the real capital is earned by being early. Being early obviously will multiply the gains over the cycle, but more importantly, what being early to a cycle affords you is the ability to get into a very strong position at a very low rate that will allow you to really weather the volatility that inherently will come in these cycles, especially with Bitcoin, which has a history of retracing back 25, 35, and 45% on a fairly frequent basis. If your base entry, if your average price is not low and early with a reasonable size, then once that volatility begins to come in and the fear levels begin to get to rise again, you end up in a very weak position, and you are susceptible to reducing that position at the very worst time, when in fact it is a time when you should be looking at it as opportunity. Also, like the last cycle, I want to point out that in the beginning phase of a 4-year cycle, if your goal is to ride for the majority of the rising portion of a cycle, then you must focus your time frame on that prize. And I think I said something similar back here 4 years ago in the early phase of this cycle, that you want to avoid getting caught up in the volatility that will come, and focus 2 years, 3 years out of the cycle and be in a position, a hard position, a disciplined position to ride for that portion. So for here, it's really the same kind of thing. We're looking out 2 to 3 years, and we're looking at higher prices, at least a price close to that all-time high, but obviously, or ideally, at an all-time high like the prior cycles have done. So when you look at that sort of a year or year and a half out, you kind of get to the summer or the fall of 2024, and you look for a price at the 48,000 level, just arbitrarily speaking, and then to an all-time high level and above, and you kind of draw a 1 year window. And we do this because we want to remain focused on that time frame. We don't want to get caught up on a day-to-day, week-to-week, or a soundbite or a news bite that comes out, or a Department of Justice threat, or any legal action in the space. Those are all just short-term events in a long-term cycle. When you're trading, when you're investing on that long time frame, you want to focus on that box. That box doesn't necessarily represent price so much as it represents time. You are invested early in a strong position to weather the storm up into that box from a timing perspective. Now, of course, there are going to be strategies involved. There are situations where we may not get up to that box, and we'll have to try and adapt as best as possible along that journey. But essentially, what you need to appreciate is that over time, there are multiple paths available to getting up to that spot. So we can look at it as this time period between where we are now and where we're heading, as anything can happen. We could easily, over the next few months, come all the way back down to the low $20,000 level, maybe the high teens again, and then come back up and get to the box, right? Or we may do something similar to what we did in this last cycle here, where we first came up over 4 or 5 months, came up high, and then spent a few months, 6 months, 7 months, and then we came up, right? There are multiple paths to getting there. And if you focus on the week to week and the month to month, then each of these volatility events that occur are going to throw you off and take your eyes off the goal of being in position for the duration of the cycle to be able to take the maximum amount out of this cycle. So it's the most difficult part of the cycle, again, because it's early in the cycle. We don't have that conviction yet. We're still afraid because of that bear market decline, but also because when even though you believe in this long-term path for Bitcoin as it's done in prior cycles, it takes discipline to sit in a position for a couple of years while you see others on social media and other avenues making money on meme coins and shit coins and any other sort of fly-by-night scheme that seems to come up in crypto all the time. It takes a significant amount of willpower and discipline to hold through that period and to leverage that time that it takes to realize that gain. There's a tendency to want to pull out, get into something else and come back in. There's also a tendency at this point to be afraid, like I said, and try and play that game of, well, if I can get out now and avoid the next 20 or 30 or 40% decline and get back in, I'll even have more Bitcoin to add over that cycle. As we've seen in the past, Bitcoin has a tendency of shaking people out, to creating fear in your mind, and it's at the worst time to be able to try and sidestep these moves, because it's at that time that Bitcoin will reverse on you and leave everybody behind. If you look at what it's done in the past, moving on to kind of the volatility aspect of Bitcoin, in this last 4-year cycle, I believe there was 6 events of around 20 to sort of 63% declines. We had numerous events. Some of those were very big, 54% decline, 63% decline on the way to the peak of the cycle. And then more, I think importantly, in the 2015 to the 2017, December 17 highs, although when you look at this, it was a fairly consistent grind to a steepening top, to a blow off top. Along that way, very consistently, 3 times per year, in fact, around every 4 months, fairly consistently, Bitcoin dropped 30 to 35% on average, with very consistent frequency, as you can see. Some of those events, 42, 40%, 40%, 43%, came often. And if you were invested for that 4-year cycle with the goal of taking profit towards the end of that cycle, if you got caught up in these volatility events, and they were significant at that time, if you're experiencing those in real time, 30 to 40% declines are savage. It can really hurt your sentiment there. If you got caught in those and panicked and sold, you had basically 11 opportunities in that 3-year period to be panicked. So it's something that requires discipline and understanding that these events will happen, not just once or twice, but all the way up towards that box, that time frame. The path given there, no matter what path it takes, will come with these significant volatility events. We've only had one small sort of 20% event more recently, but I think very soon, perhaps just given historically how it's performed, we will see 30 and 40% declines. A 30 or 40% decline, even from this point, for example, would send Bitcoin right back down to around 19,000. Not something I'm necessarily expecting right now, but it's really irrelevant to the conversation. What we need to understand is that those events will occur, and if you have that bearish sentiment or that fear that's still built up, that is going to compound the effect of an event of 30 or 40% decline in Bitcoin. It's essentially going to lead you to panic your position and sell that position right when, in fact, in the early phase of a 4-year cycle, you probably need to be looking to add to your position if your position is not of the right size at this point. So I'm not saying that volatility is coming right this moment, but again, we know historically that volatility is always coming in Bitcoin. It can come at any time. And at this point in the cycle, those dips are not for panicking, those dips are for buying. There is a level of trust and faith that we need to place in a view like this, that the cycle will continue up to all-time highs and will follow prior cycle paths. And that trust is what you need to develop to build that conviction that you need to hold through that period. It also means that you need to be sensible and reasonable in how much you allocate and what you allocate to this. Again, as I said in prior cycles, if you put too much into this and your expectations are far too high, and you look at this as a way to absolute fortunes and riches, it can pay off, but the amount of conviction that you need to have to be able to hold a position like that, and the amount of risk you're taking on, generally does not end well, especially when you see these 30, 40, or 50, or even 60% declines. If you have got too much exposure to any one asset or to any one theme or idea, those events that come in Bitcoin are going to seriously test your conviction, and you're most likely going to fail if that position size is not right. The position size does not need to, relative to net worth, does not need to be anywhere near significant or extreme to gain a significant amount out of a cycle. The goal is to get a great low average price early in the cycle to build that conviction. Then if you have plans on wanting to add to your exposure and you want to get a little more, add a little more risk to this, possibly you're younger and you've got a view that you can sustain a larger position, then what you want to be doing in a case like that is waiting for those 30 to 40% events and adding at those events. At least that's going to provide the cushion historically. Once Bitcoin makes that 35 to 40% decline, it means it's near the end of that volatility event. Of course, it can go lower, and it did in the last 4-year cycle a couple of times, but if you get in at a 35% decline or so, again, you're keeping that average price lower, and you're hopefully getting close to the bottom of a short-term dip that will allow you to increase that position size without really pushing up your average cost, still keeping you in a very strong hand position to weather the rest of that cycle. I think I've already seen people talking about a possible top or fearing a top. Part of that, again, is the idea that we just came through a 12-month bear market, a pretty significant one at that. But in general, what I will say is that in the early phase of a 4-year cycle, it is more unlikely that you would see a top in a 4-year cycle so early and so far from the prior all-time highs. I've talked a lot about the potential for a left translated cycle, meaning that this 4-year cycle, 4 years from this recent low going out to 2026, that the peak doesn't occur around year 3, that it occurs around year 1 to maybe 18 months. That is still a possibility, but it's too early to be concerned about that. It's too early to be worried about that. And if that were to occur, a left translated cycle top normally comes on a very significant impulse-like move. So what I'd be looking for potentially is a really big solid run up, maybe something similar to what we saw in here at 2020, that is, where we had sort of a 6-month rally or 6-month move, something like this. That would kind of concern me, getting up to all-time highs and breaching all-time highs by kind of like the end of this year, end of the summer, maybe close to the end of this year, maybe pull this out a little bit out to like December of this year. If we had a significant move well before the halving that got to all-time highs, I would then be certainly on the lookout for a left translated cycle. An event like this would really draw in a significant amount of retail traders, and sentiment would really skyrocket. The super cycle narrative would be front and center again, because that high would come well before the halving and sooner than it's ever done in a 4-year cycle. So that wouldn't create fear, it would create a level of excitement because it's happening so soon. And then you would see projections up towards 300, 400, 500, or even $1 million for this cycle. So absent of that, absent of a significant move up to, let's say, the 55,000 level and above by this year, absent of that, I'm still of the opinion that we look for a cycle that is similar to prior cycles, that is going to go up mostly for the 3-year period, Former high, again, we have diminishing returns as market cap increases, but essentially a breach of all-time highs, maybe sort of a 1x move above that. It's difficult to say again on price, but the point is that we still want to focus on the window and not be afraid of these tops that come early, at least not this early in the cycle. We want to at least see 12 months progress. We want to see some level of frothiness in the market. Even a left translated cycle that ends up resulting in a 3-year bear market is very likely to produce a kind of mini mania event, and we've got nothing remotely like that at the moment. In fact, sentiment at the moment remains relatively neutral, if not slightly bearish. We don't have the conditions here for a left translated cycle high, so I don't think you want to be afraid of that at all. We're still below the 30,000 range. You want to be focused here on just holding your position, obtaining that position. If for whatever reason you have been slow getting into a position from this cycle, as I always like to say, forget the short-term volatility potential. Get a reasonable position. It's still relatively early in this 4-year cycle, even though it's up something like 70 or 80% off those lows. It's okay. You have to be able to look beyond that and acknowledge that you may have missed the cycle lows, but you don't want to be in a position where you don't have a position and Bitcoin continues over the next 2 or 3 or 4 months, gets up towards that $40,000 level. What's going to happen then is FOMO will really come into this marketplace. It will likely consume you. You will likely end up buying at that point because you just can't stand the fact that you don't have a position and Bitcoin's already at the $40,000 level. You'll end up getting a position at that point. Then we will see a classic Bitcoin shakeout, a 35-40% event. And because your average price will be so high at that point, seeing a decline by 35 or 40% is going to be very difficult to handle, and that's where the mistakes occur. Again, repeating kind of theme here, getting in early, getting a good average price, establishing a seller position. So even when the market drops 35 and 40%, the position is still profitable. That's going to allow you to weather those events that occur 2 to 3 times a year historically on the path up to the goal of holding towards that 3-year mark and seeing what the cycle can give us. We don't know what type of extension we can get to all-time highs and above, but we want to be there for the ride in a very strong-handed position to take advantage of it as best as possible. So this video is more of a pep talk than anything else, just to kind of set that conviction, try and put that bear market that we went through behind you, try and focus on the future, not the past. The past has a habit of really influencing our decision making. You want to focus on what we expect or what we hope to see and position ourselves accordingly. The most important thing in investing, the 3 most important things are when you get in, obviously when you get out, and then in one big bucket, what you do in between. So getting in is the part we've done at the moment. If you haven't, again, I suggest that you do get that position and accept the volatility that may come. The exit is ahead of us. We can't focus on that right now. There's no point in throwing out targets. I'm often asked, what's your target, by when? It's irrelevant at this point. We want to be in a position from the early phase of the cycle to be able to identify as best as possible when the best exit is. But to be able to get to that exit point, to realize that gain, you need to be able to then focus on the holding portion, what you do in between. The decisions you make on the way to that box is going to basically is directly correlated to the performance that you'll have over that cycle. Don't have to get out at the very top, don't have to hit it perfectly, but if you can get in as perfectly as possible, as best as possible, then it's going to make it an easier decision to be able to exit the cycle, and it doesn't need to be anywhere near the highs in the end to do really well. To get there, again, you need to make the right decisions, and a lot of the time in a long-term endeavor like this, the right decision is no decision, is content with what you have, positioned early, sitting on your hands, accepting volatility, accepting that there will be drama, there'll be FOMO events and so on, but you want to just trust the course, stay the course, and avoid all the noise that you see and hear out there on other shiny objects that can take your attention away from this goal. If you can focus on that like we did in the last cycle, then in general should do really well out of this. I wish you well, and I'll have another video out in a couple of months. Take care.